Welcome back, everybody, to another episode of DeFi Revelations. I'm Kirk, your humble host. Today, we've got Darius, the founder of Vertex, on for an episode about how Vertex is really kind of taking this chain abstraction narrative into their own hands and expanding to multiple chains while not really sacrificing trading execution at the end of the day. So one of the big things I took from the episode in our chat with Darius is how much they value the UI and the UX, how they're really thinking about maintaining that as they go cross chain with their perpetual platform. So we hope you enjoy the episode. If so, definitely encourage you guys to like and subscribe, and we will see you next time. So thanks. All right, welcome everybody back to another episode of DeFi Revelations. I'm Kirk, your humble host, and with me we've got Darius, the co-founder of Vertex Protocol. How are we doing, sir?
I'm doing pretty good. Bit tired. We were just talking before we came on air, but yeah, I'm good.
Yeah, good to have you. We were talking before about how I'm shocked that you're even here today. So doing the Brussels scene, people trying to attack your servers. It's crazy.
Yeah,
Great. Never. I guess a normal day in crypto.
yeah.
I guess.
Normal day in crypto, working with wonderful people.
Awesome. Well, to kick things off, always like to get started to kind of like let the listeners know a little bit about your background, how you got into crypto,
Yeah.
and maybe tell us why you guys decided to create, Vertex, at the end of the day.
Yeah, so my background's in trading. I've been trading since 2004. I started out as a currency options trader and then moved into metals. And then I traded commodities for about 10 years or so, maybe a bit more. I was running large bank desks for a while and then went and helped set up a hedge fund. And the years that we did the hedge fund were pretty much the worst ever years for commodities trading in the last 50 years. And so a bit bored at my desk with not much to do. I'd been kind of dabbling in Bitcoin a bit, like tiny stuff. And BitMEX came out. And I was like, oh, this is interesting. And this was around 2016, 17. I can't remember when they came out exactly. I think it was 16, right? Then everything, yeah. So I was like super early BitMEX user, and I just used to do a lot of cash and carry. Back then, you could do spot per pub in like pretty okay size, personal size rather than institutional, but make like almost triple digit returns just buying Bitcoin and selling the perp. It was kind of free money. And so I did that for a while and I was trying to mess around with some currency arbs, kimchi arb, things like that. And then when Bitcoin collapsed, I sort of drifted away from it, sort of after the ICO boom. And then we're still at the fund. And then in 2020, when COVID hit, crypto started getting interesting again. I just wanted a change and I just decided to make the leap of faith and jump into a job in crypto. And so I was trading initially and then decided I wanted to move over to the builder side. So actually, like Vertex is sort of the end product of myself, my co-founder Alwyn worked at Jump, SJ that works with us worked at Goldman, even our lawyer worked for a hedge fund. Like we're quite trader type of mindset. And so Vertex is the platform we built that we wanted. Sort of a decentralized platform, super capital efficient, fast, nice UX. That was really what we wanted. So that's what we've built.
Gotcha. So I guess segueing right into Vertex, then there's a lot of competition in the perp space. I mean, obviously, I'm not saying anything you're not aware of yourself.
Yeah.
Like, what do you think ultimately separates Vertex and the model you guys have built maybe from other competitors? Like, I don't know, say GMX or Hyperliquid's obviously a hot name right now. What do you think really differentiates what you guys are trying to do?
So I think when we started, like we launched at the beginning of last year, we were working on this all through the kind of 9 months before that. I think our main take was that UI UX was generally terrible in the space, and that there was a lot of edge to be had there. Kind of typically, we think we did a really good job of that, and I do think that's differentiating between, say, the top maybe 20% and the rest. Is the rest tend to have like terrible UX, so users don't stick around. then the top 20% have pretty good UX, but it's not super differentiating as it was maybe a year ago. Like the fact is that's kind of disappeared as an edge. Then like we've retained like a speed edge. I'm confident by like a factor of 5 to 10 with probably the fastest technology. For retail though, that's not that differentiating, to be fair. That's more a thing that helps liquidity, helps you trade with HFTs, do all of that. Then the next feature is probably the capital efficiency. We're really the only platform I'm aware of where you can cross collateralize, cross margin all of your positions. So any position you have in our books, and that could be LP, spot token, like you can have Arbitrum tokens and go and trade perps, and it all just kind of magically works so that your portfolio just kind of is managed together, which opens up some like really nice use cases. So like there's a protocol called Pair Protocol that focuses on pair trading. They've built an integration on top of us. It uses the cross margin, the fact you can execute different currencies. It's pretty nice. So that's one. And I think the last one is probably Edge. I'm sure we'll get into Edge today when we talk, but like we've enabled our sequencer to function in a cross-chain manner whereby like users on different chains can trade and match on the same perps order book. And what that means is like we have no cold start problem when we go to a new chain. So currently Vertex operates on Arbitrum, operates on Mantle, but then we also have another brand that we call Blitz, which operates on Blast. So the liquidity is active on 3 different, and that unlocks a lot for users because then, if there are chain incentives, different things going on, different ecosystems, different spot markets that they might want to partake in, they can get the same UX, same liquidity, same experience, same speed, all with the scale benefit of everything that's gone before, but trade one place. So, you can think of it as like, it's kind of like a synchronous network of exchanges rather than just one exchange. And that works really well. And we're really excited about that because we don't think any of our competitors can do that currently.
Right. Yeah, that's definitely something unique about what you're doing. So my question becomes, and I think maybe you touched on the reason why, maybe what the motives are, but you see things, like I don't know, like DYDX obviously going into their own chain. I think Hyperliquid, is planning their own chain or might already be on their own chain. Do you think that has merit, or do you think it's more or less you guys have chosen to kind of integrate more chains versus being on your own L1 or L2 because of the flexibility of, okay, hey, if users want to go take advantage of incentives on Mantle, bam, okay, there you go, or Blast or wherever. Like,
Yeah.
is that a model I guess you guys think is going to continue for you, or are you guys looking at maybe the Appchain thesis?
Yeah, look, so like I actually really get the Appchain thesis, and it's something we looked at really closely up to almost launching Vertex. Originally Vertex was going to be on Terra, so the idea of app chains as a Cosmos thing were like super apparent to us. I think what we really realized is like the app chain thing misses a lot. So the working assumption that all derivatives dexes would become app chains was kind of prevalent. It's like the common thought process. And really, it's because the thing that really affects derivatives is gas. Because it's like a high frequency trading, lots of like low level transactions, especially if you've got an order book, right? It's very difficult. So having an app change a way of controlling that, and then you can make the thing work well. I think our take is that when EIP 4844 came in, blobs just collapsed the cost of call data. Gas became exceptionally cheap. So now you're looking at, well, let's not think of these as like piece of technology. You can think of these chains a little bit like countries. They're like sort of isolated economic systems. They connect to each other, but like broadly speaking, the rules of the country all kind of live within that one chain. It's, do you want to be a small country that you rule completely, or do you want to be a big thing inside a bigger country? And our like bet is that being a multinational corporation, which is effectively what Edge gives us, right? We have all these entities on all these different countries, but they're all connected to each other and they all share money and revenue and liquidity and function and cost of production. I don't know. I'm stretching the analogy, but you get the idea.
Yep.
That can be far bigger. So, like alignment with foundations where we say, no, like we come to you, we consume block space. That's kind of our tax, right? We keep users in you, so we keep your population happy. We generate revenue on you. We keep everything on you. We don't do a deposit contract and take TVL elsewhere. We just work with the foundation. That sells really well with foundations. And guess what? They've got way bigger treasuries than any app. And they've got way bigger marketing teams and way bigger reach and huge communities. And so our feeling is that we can build a confederation of foundations who are bought into our success, and that by aligning with those people, Vertex can be a bigger success. And we already see the beginnings of that now, right? A lot, 50% of Vertex volume roughly happens on non-Arbitrum chains now. Arbitrum's still our biggest instance, but as we add new chains, every chain we add is going to add volume, and that's going to be exciting because then that adds more use of the liquidity market makers on all these different chains. It's going to be like properly exciting. Yeah.
Pair Protocol is the first and only trading platform for narrative trading. Their technology unlocks the ability for anyone to pair trade. For example, if you think ETH will outperform Cardano, you can long ETH ADA in one click with leverage. Or perhaps you think Pepe will continue to outperform Doge. You can long Pepe Doge. Again, all in one transaction. The combinations are endless. Learn more at beta.pair.garden. Yeah, I want to take us back in time for a second to when you guys launched Vertex on Arbitrum. From what I recall, GMX was basically kind of like peaking. Everybody was talking about GMX.
Yeah.
Fees were printing, obviously.
Yeah.
But obviously that's a different model than what you guys built, right? That's Oracle based, a pooled system for the counterparty to execute the trades. Talk about maybe like why did you guys decide to build the hybrid model that you built, and like what are some of the trade-offs you guys had to consider? Like obviously it doesn't rely on oracles the same way as GMX. Talk about that a little bit.
Yeah. So like trading doesn't depend on oracles, but obviously we still use oracles for liquidations, funding,
Right.
things like that. So oracles are always going to be part of the game, but I guess the economic trading activity is not based on oracles. I think it's pretty simple. I think GMX like smashed it when they did the pool based model. They did very, very well. Their whole model, it's an easier thing to bootstrap. It's a harder thing to scale. And to their credit, they scaled it about to the absolute limits of where it probably could have gone. I think at one point they had like $500 million of TVL.
Yeah.
On any given metric, they could accommodate like a billion or 500 million of OI type thing, I think was the limit. I forget how the exact equation worked for it. I think it was 500 million, right? So that's a massive number. It's really big, and they did a great job. But the problem was then they hit the limits of scaling, and like people couldn't take more positions, and the thing was expensive because you have to protect against adverse selection because it's Oracle based, right? The funding rates are extremely high. So there was just a lot of fat in that thing. And really what they were doing was connecting people that couldn't get access to derivatives anywhere else and people that wanted yield. And that payoff worked for them for a long time. So when we launched and we said we were going to do an order book, I naively, right, this speaks to my naivety. So you're asking about the story about when we launched. I just looked at this and went, oh, it's nothing like what we've built. people will be absolutely delighted that we are launching on Arbitrum. It's going to be great because they've got GMX, they do their thing on
Yeah.
GMX. We geo block the US, for example. They don't. Like, we're just going after like a different thing. And I could not have been more wrong at the sort of reaction that community would have. It's like, who do you think you are coming here? It's kind of a like turning up on the
Yeah.
block, and like people really reacted badly. And to be honest, like launching anything new is fucking crazy. So like when we launched, we depend on professional market makers to build liquidity.
Yep.
So, obviously, like I'm out there, team is out there. We're a small, scrappy team at this point. Most of the building we did was with 6 people. That was the whole team for like 6, 8 months.
Hmm.
20 now, which is still small, but 6 was ridiculous.
Yep.
And so, it's quite stressful. You launch, and then on day one, market makers said that they'd be there. People were ready to trade, and no market makers turned up on the first hour of trading. And so for the first hour of trading, I was manually putting in prices using our UI because I didn't have the API and all that set up. Manually, I was putting in prices. People had something to trade on. For about I think it was about the first 2 hours, I was doing ETH, spot, and perps. And SJ that I work with was doing BTC. And then we were shouting like, "Oh, I just got paid, given we've got a lower price." It was so crazy. And then the market makers turned up and we had liquidity on the books and it was fine. So when you say about launching, yeah, it started very small and then you just
Yep.
see it grow. And I think what happened was, all of that I just described continued really into when we did the STIP. And then
Hmm.
when STIP launched and people saw how effective we were with those incentives, I think we got awarded 3 million. I think GMX took 12. I think Gains took 7. When you see
Yep.
the volumes and revenue that drove and everything else, people start to go like, "Oh right, yeah, this is a real thing." It's crypto, so this isn't really about those communities, but people always assume you're a scammer until you've been around for a little while. I think then
That's
people
true.
start to see like, oh, they're a legit team. They really care. We just relentlessly shipped product. We focused on our core users. So now, like, our core user community is really like a lot of algorithmic traders, and then a
Hmm.
lot of what I call like more high touch or semi pro traders that they want all those little nice features that kind of the nerdy side of myself and Alwyn and the rest of the team wanted as well. So we've just sort of found our niche.
Yeah. Talk about grinding at the start of the protocol. That might be the craziest story I've ever heard.
Oh man,
Yeah, man, for the first hour of the protocol.
yeah, yeah, yeah.
It'd be hard to top that.
I mean, there
Um,
was a lot of adversity, right? So as I said, originally we were on Terra.
yeah.
When Terra blew up, we had to like rescue our treasury by like selling all the UST we had. Then we were moved into USDC depegged. All we had, I mean, it was just event after event. It was
Yeah.
just a sort of crazy couple years. But yeah, now it's relatively casual. Someone trying to hack us yesterday was in the more casual things that have happened in the last 2 years.
Right, right. It's like you're used to it at this point, so it's nothing.
Starts to be
At the end
that
of the
way.
day.
Yeah, exactly.
So I wanted to. You did mention incentives, and that's a trigger word for me because I think it's a you know, it's constantly changing in this industry, right? I mean, first you had, liquidity mining. Then people started, selling points, and pushing points. I know when we talked in Denver a while back, you had an interesting take on like the effective. I think you guys tried a points program or some kind of a program at the beginning of Vertex that didn't have like the exact same like effect as maybe points did now. Like, what is your take now on like how points have taken off? And do you think that's shadows and mirrors, or do you think that that's still got a future moving forward for the way that incentives are being tossed around in the industry?
Um, to be honest, if you'd have told me 18 months ago that I could have done a points program, I would have just laughed and been incredulous, because when you think about what a points program represents generally, it's it's not even a promise to give something. It's a hint that maybe you might give something in an unknown quantity at some point in the future. And in exchange for that, maybe might be something, people will speculate. Like, they'll spend real money in trading fees, losses, whatever, deployment of capital. Sometimes people don't think about opportunity cost of capital. So giving someone a deposit for 6 months, you forego the interest effectively and earn a point, which you hope is going to turn into token, and you hope that that token will have some fundamental value created by the ecosystem. But frequently, no step of that is defined for the underlying investor or user, right? So when you look at it in that context as like an economic thing, it makes zero sense to me. But then actually, when you look behaviorally, I think people just think of them genuinely as like reward points. It's a bit
Yeah.
like Amex points, or an equivalent thing. And if you sort of reframe it and look at it that way, yeah, I mean, it works, right? And people like it. And, maybe I shouldn't have been so negative about it. And so I go up and down about it, is the truth. I can't remember what I said in Denver. It depends how hungover I was,
Uh,
how aggressive I was feeling. But, I am surprised at like how much ill definition users will take on some of these points programs.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, and non-liquidatable loan. Deposit your assets and access your future yield now. Available on Mainnet, Optimism, and Arbitrum. Head to alchemix.fi to get started. Yeah, yeah. I think what you mentioned in Denver was kind of like, I think you mentioned the behavioral aspect there is it's like the what if, and I think you guys had initially laid out like exactly what they needed to do to like earn, right? And it just, it doesn't have the same psychological effect as I
Yeah,
don't know what I'm going to earn, which means that like I guess irrationally I should think that I'm going to earn like a fuck ton of tokens, at some point in the future.
I think
So
it's
it's
just,
funny how that psychology kind of plays out.
yeah, I think that's exactly it. I think that's the human nature of the thing is, as soon as you see, oh, I've got like 20 million points, it's probably not the case, but you do start to think like, what if one of these points is worth $1? I could do pretty well, you know? Uh,
Yeah,
and so, yeah, and I think like the speculation of points markets, then that, there's like a pre-market for the pre-market for the pre-market type. It's just crazy. So, but yeah,
yeah.
people like it.
Yeah, it's been crazy to kind of see how that's shifted. Anyway, kind of going down a rabbit hole in points. We could probably talk about that all episode. Let's bring it back to Vertex Edge though, because I know you mentioned earlier, right? It's kind of like Edge is taking you guys, multinational corporation on your strategy. Let's talk about maybe the secret sauce behind Edge. You guys still achieve a tremendous amount of low latency when it comes to like execution. Like how are you guys achieving that, and maybe like how is Edge architected to kind of create this cross chain environment that I think that's actually becoming like a very hot topic now, with some of this chain abstraction movement type projects that you're seeing come up, like Everclear and Socket, and that whole movement to kind of improve the overall UX for apps and crypto.
Yeah.
But you guys have kind of taken that and done your own thing with it. But how are you guys like actually like architecting this to make sure that latency remains low, trading execution is awesome, and that's all maintained?
Yeah. So when we launched on Arbitrum, we went back and forth a lot about like how we should structure our order book. And you very quickly realize like an on-chain order book is just not a real thing. Like if you want to have something with decent liquidity, it means you have to have like very low latency. And to do that, you just can't have globally distributed nodes approving transactions, because the speed of light to go between those nodes and get consensus just take too long, right? A ping will just take too long.
Yep.
So that then reduces you down to like, okay, well, if we want to make it performant, then you got to have like one central node. And that thing just has to be the only path into contracts, right? So when we started, we had quite centralized, just like one server. And it's a one server that handles like our own Rust-based EVM environment. So we like fast forward the chain effectively, right, to maintain chain state. But then we're just at the same time we're doing all the matches in the background. So you can think of it as just like stuff's coming in one by one, and the actions of those change the state of the contract. But then we're running that in like ultra low latency time at the sequencer level. And then we maintain like what we think the state on Arbitrum should be underneath, right? And then we send that down to Arbitrum. And so the fast forward becomes the reality of the chain. Does that make sense? Like as time goes
Yeah.
by. And what that means is we can store on the chain on our own sequencer level what Arbitrum future will be effectively, if you think about it that way. So like when Arbitrum got spammed with inscriptions, we were the only thing on Arbitrum still trading because we had this sequencer set up, right? Now, the insight we had was like, oh, we could just like run more than one videotape at the same time and do a match at the sequencer level, trade, clear to like Arbitrum, Blast, Mantle, whatever, right? But let's say we trade, you're on Arbitrum, I'm on Mantle, we trade. I need an offset within the same blockchain. We just set up an internal trader. We call it the X account. And the X account will just be long and short, but on different chains. So the system stays in balance, both on a chain level and a system level. But now we've got like balances running on every single chain into this X account. And the X account has like all these open positions everywhere. That makes sense?
Yeah, it does make sense actually. Huh.
And then the nice thing about that is it's constantly like rebalancing as people trade and do cross-chain things. It just works. Now, the natural question you'd have is like, oh, okay, but what if Darius makes money and Kirk loses money, or vice versa? At some point, you have to do some bridging, right, to move capital between the chains. But the nice thing is that it tends to be on most chains that on average, some people lose money and some people make money, right? And actually, people are almost 50-50 equally wrong as they are right on each chain. You know, it doesn't tend to be
Right.
all the right is on one chain and all the wrong is on another chain.
Right.
And so you get kind of a normal distribution of returns that mean that you actually don't need to rebalance the X account very much. So when we first designed this, it's kind of an accounting trick, right? We thought, we sort of modeled it little. You can't really model ahead, so we thought about it like on a piece of paper. Right, maybe we'll have to bridge once a day, maybe once a week. As it's turned out, this averages out way more than we modeled for it. So we've been up and running like 4 or 5 months now. I think we've bridged twice, maybe 3 times. So you can see it's just what's being saved in the background is like a lot of other solutions where they involve bridging or some kind of risk or pool of money. That's pretty capital inefficient, right? So you have a lot of idle capital sat, or you pay a lot of money to people who do have capital sat. It makes your solution expensive, and then it doesn't work, and then it's not good for users. Our stuff just like gets rid of all those fees. Like it essentially like internalizes all the bridging, and then we just do all this infrequent bridging, and then keep risk in balance. So touch wood, so far, it's just worked incredibly elegantly.
Yeah, that's great to hear. I think the first question that popped in my mind, obviously this is taking us to a future that we don't live in yet, but let's take base for example, right? Like let's say that you guys integrate base on base on boards, a shit ton of users, everybody's trading on Vertex on base, through Edge. But obviously there's what I'm saying is, what if there's a lot of traders on one chain that are trading, not so many, elsewhere? How are you going to go about like keeping it all balanced when like there's so many users on one chain? Maybe there's more capital winning trades on that chain, and it causes you to have to bridge more frequently. Or am I thinking about that the wrong way?
I think what you'd find is as a chain actually got bigger, the need to bridge in and out of that chain would get lower and lower. Because if you think about it, the likelihood that longs and shorts balance out on that chain would be higher.
Right. Like with just the native capital on the chain. Gotcha.
Actually, where you get problems is where a chain is small, relatively new, and then but there's like a few people taking large directional bets in one way. That's where you're more likely to get this issue of needing to bridge. So actually the issue is the other way. If we went to base,
Gotcha.
which between friends is not a totally unlikely thing, if they had loads of trading happening, my expectation is the churn and the offset between the different people on that chain would mean that, yeah, we probably wouldn't need to bridge as much. And the good thing with base is they're integrated on CCTP.
Hmm.
So actually, we can use Circle's own native API to do mint redeem for bridging in and out at zero cost. So those ecosystems where that's possible makes life a lot easier for us.
No, I think it makes sense. And obviously, I'm assuming you guys are going to be relatively selective, about what chains you're going to, right? So probably like these small up and coming chains, that it reduces the risk because I'm sure you're vetting all that, when you choose to onboard them, right? Or do you eventually see that like Vertex Edge is everywhere, right? If Barachain even fucking exists and it launches, tomorrow, is Vertex going to be on these chains like very early is what I'm saying, and where that risk is maybe a little bit larger for the having to constantly bridge.
Um, so honestly, I think what we want to get to is a model where we can onboard as many chains as possible as quickly as possible. So naturally, you start slowly. The onboarding and the model and getting everything right. I don't think we have got everything right so far because, by the way, this is brand new and no one else has done it before. And so we're kind of figuring things out as we go. But I think what we're seeing is as we're figuring it out, we're getting quicker and the iteration loop will get quicker. And ultimately, what I want is Edge is this way of us just networking out. We create this like synchronous network of exchanges, right? You can think of Arbitrum Vertex as Vertex, Arbitrum, and Vertex Mantle, and we got Blitz on Blast. But like, you can also think of part of the reason we have a different brand for Blitz is because really all these chains are different exchanges plugging into one network that's working all together. They're all synchronized, and what that means is you really want to be everywhere. I want the brand to be on every chain so that instead of you going to new chain because your friend said, oh, this is a new chain, it should be good, let's check what's available. You go, oh, I'm going to use this chain, Vertex. I'm just going to use Vertex. I just want that to be the mental association for users. Like, oh, I want to use this chain, I'll use Vertex. That becomes like, then you become a very foundational product for people. I think really there's only a few brands that have done that. We'd like to be one of those.
Yeah, I agree. Uniswap comes to mind when I think of that. Right? Well, fuck it, I'll just use Uniswap.
Right. That's what I want people to be. Hey, fuck it, let's use Vertex. So let's see.
There we go. That's the new slogan coming out of this podcast. I'll
Okay.
see it all over the Vertex marketing team here
Yeah.
shortly.
Okay.
So I think you mentioned a little bit. You guys do have some like off-chain components, obviously, to what you're doing, and I think well, I'm not shocked by it. I think we have to have a pragmatic approach to the way that we design these systems. Like there's on-chain maxis that think everything should be on-chain, but then everything's going to suck. Just being honest. So, but obviously, with the off-chain component, talk about maybe like what risks are you guys concerned with? Like, is there a way to like decentralize that at all? Is there a possibility of front running, some of the orders, MEV? Just talk about any of that and how you guys are thinking about those things.
I always find that argument around MEV and front running of orders to be highly specious and built on just sand. I guess what I'm saying nicely is it's kind of bullshit
Hmm.
because MEV is just rife on chain. I mean, millions and billions of dollars stolen by MEV searchers is built into Ethereum at a network level, right? Which is, to me, criminal.
Yeah.
So the first thing to say is like, game theoretically, we would never front run orders. One, we don't trade. We're very busy building an exchange, and frankly, like an exchange makes money taking no risk. So that's like an easier game to play than front running orders. One. Two, if we did front run orders, there are a lot of highly sophisticated actors on Vertex who would just stop trading on us. They would be able to detect it, stop trading, and leave. Now, because our latency is so low, this is the last part, the ability for there to be that kind of behavior is highly minimized because your real opportunity is within the bandwidth of the latency that you operate under. Well, people trading on our private link get sub 1 millisecond latency. So it's not that much money you can make in sub 1 millisecond. Once you start to think
Yeah.
about transaction fees and blah, 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 like the ability to do that is like vanishingly small. Vanishingly small. That's the first thing. Now, actually, to put all that, because I hate talking about that and I just think it's kind of boring.
Yeah.
More interestingly, like the bits that we worry about are more security based, right? We know that we're a trustworthy actor, so we behave in that trustworthy way. But we know that where there aren't trustworthy actors, people that, there was a big security breach around DNS domains. The Squarespace thing is quite well known at this point. Where we worry is, could someone take control of the sequencer? Could someone else come in and use the thing? And that's where decentralization is really good, right? Because you get security you can't hit across one place.
Yep.
So actually, not many people know this, but Vertex now run, I believe, 4 nodes. I might be wrong, 3. I would have to talk to my engineering team, but we run a number of nodes that operate around the sequencer and effectively operate as signing keys. So those servers operating as signing keys are like our first step towards what we would consider like a full-scale decentralization of the sequencer. But what they mean is like multiple members of our team have signing rights. Unless they all sign via the server, the thing doesn't work. You
Yep.
can't you can't change, you can't manipulate. And ultimately, we think we can get that into a distributed system, not a blockchain, but a
Gotcha.
high performance distributed system that has a slashing relationship with our token. And
Mhm.
we can just totally decentralize that architecture, but maintain super level performance. And we think that's like the best compromise you could have because then you've got the execution layer is up here, high performance, really working well. And then settlement ledger is on blockchain and on various blockchains. So we
Mhm.
have interoperability, high performant hardware, super secure ledger for that's flexible across many chains and useful for many users.
Gotcha. So you're telling me we won't ever see like a Vertex AVS secured by restaking or anything like that. It sounds like maybe you guys have thought about that and just probably determined maybe it's going to affect the latency, or I mean, what are you guys thinking there?
I don't know that never say never. I think the bit that you're talking about would happen in like stage 2 or 3 of where we're at right now. We're probably at stage 1, which was to do a internal
Hmm.
decentralization, then
Yep.
thinking about where we run that and how we run that starts to creep into this thing that you're describing. And do you use an AVS? Do you build another piece of architecture that works better than that? We have some ideas in that space as well, but it's kind of all a bit, um, yeah, it's all a little nebulous, that part of it. Right now, what we're focused on was the decentralization I've described, and that's
Hmm.
done. So, like yesterday, when there was some concern about DNS, we were very relaxed about the sequencer. It's no problem, it's fine.
Right.
All the contracts are safe, sequence is safe.
Makes sense. Makes sense. So we're coming up on a probably a good time to wrap up. Before I do though, I know you mentioned, kind of Vertex's future. You guys are focused on, chain expansion. It sounds like, you mentioned a possible expansion to base, or maybe you didn't, between friends. But other outside of that, like, do you think that that's the future, 2 3 months from now that we're living in, is where has this mass expansion into other chains, or are you guys still focused on product, or do you guys think product is in a pretty good space right now?
Yeah, so look, I think product's in a great space. Weirdly, it's in a space now where I'm almost outsourcing product to community. And it's not that we don't think about product, but when we started, the discussion I'd have with my product manager was all about, well, what would you want, Darius? How would you have it? How would you use it? And it became very much the product worked. It wasn't where I would want it, but all those basic first decisions, I became really the first customer. Now we have real users, and they are, most of them, really quite thoughtful. And some of them are like so great with the product. It's really nice talking to them. They sort of drive that product direction. So we're still taking feedback and developing the product, but it's not something, we're more the executors of the will of the people, if that makes sense. At this point, the thing that is more us executing what we think is like business plan stuff and driving the protocol forward is move to many chains, build relationships with many foundations, align incentives between those foundations and Vertex, go there, do a great job for them, have them benefit, have us benefit. That's kind of what we're trying to do.
It makes sense. I mean, so do you guys feel pretty good about, I guess your market maker pool, the relationships on the market maker side of things, where you could scale pretty well into all these things? Or are you
Yeah.
guys still looking to expand there?
Yeah. So more liquidity is always great. I think similarly to product, we probably at the end of like phase 1 of building liquidity. I think to get to what I would consider phase 2, which is then starting to close the gap with centralized exchanges, we need to pull some different levers and find ways of like bootstrapping the liquidity more. Alignment with foundations does that to some extent. So, going to new chains is achieves a number of things. It's more liquidity, better incentives, more users, more reach because, more marketing partnerships. It just builds, as I said, this kind of network where we're like an island on Arbitrum. And that island's actually served us really well a year in. But now, if we want to grow, we've got to make sure that we have all these other chains added and products and teams and expands our network. And it's actually amazing. You'd think that that wouldn't be the case, but like when we went to Blast and when we went to Mantle, suddenly you just pick up new users that have never seen your product before. Quite exciting.
Absolutely. I mean, I want to live in that euphoric land every day of my life. Well, it's been great, Darius. Thanks for your time. I know it's hard to carve out these days with everything you guys are doing. So really appreciate you coming on. For anybody listening to this, obviously check out our show notes to follow Darius, to follow Vertex, to check out what they're doing. We've got obviously several pieces of information, published on Vertex on Revelo Intel as well. I'm sure with more on the way. So Thanks for tuning in, and we'll see you next time.